Welcome to Coffee and Crypto with Lee and Jimmie. I am Lee Reiners, joined as always by Jimmie Lenz. Jimmie, happy Halloween.
Happy Halloween, happy fall. Man, it feels great outside, doesn't it? I love this time of year.
It does. Well, the first couple of days of this week were just absolutely miserable. But now it is a beautiful fall day. So let me ask you this.
You taking the boys trick-or-treating tonight?
Yeah, we got a Spider-Man and a tiger going trick-or-treating tonight. They actually wore their costumes to daycare today, so I'm sure they're going to have a ball with that. But let me ask you a question, Jimmie, because you are a proud native son of South Carolina.
I am.
And you weren't born and raised in Charleston, but you go there a lot, right? Oh. You're a big fan.
Got a house down there.
Okay, so Charleston, amongst the many things it's known for, is probably the ghost capital of the United States. I mean, wouldn't you say? I mean, I've been on a ghost tour.
Oh yeah,
in Charleston.
Down there.
So let me ask you this: do you believe in ghosts?
You know, that's a good question, Lee. It is. I think certainly the spirit of people past haunt places. I don't know if it's like people think they do, but I think the spirit of times past do certainly haunt places. There are places you can go to that just have a strange feel about them. And I'm not thinking of Charleston, actually. I'm thinking of places like Gettysburg. If you go to Gettysburg, for people who haven't been there, if you go to Gettysburg, the battlefield there, and you walk around, I dare you not to feel that something really bad took place there. Right?
Yeah.
You've been there. You know that
it's been a while, but yeah, I've been there. Okay, but you're not necessarily subscribing to the notion that there are the spirits of deceased soldiers from the Battle of Gettysburg are still wandering the grounds, or it's something a little more ephemeral.
Maybe a little more than that. But you know, something bad happened there for sure. It has a strange feel to it, I think.
All right, it's a nuanced answer. I do not believe in ghosts, but I'm not too eager to prove that thesis. You know, I kind of let things be. I'll put it that way, right?
Yeah.
I'm not gonna stir any pots when it comes to the spectral realm. So anyway, you are back from a trip to Las Vegas. You survived.
I did. I survived Money 2020.
Money 2020. So how did it go? Tell me about it. What insights did you gain?
I'll tell you, it was one. It's overwhelming for people who haven't been there. It is huge. I mean, if you can think of a financial company, they are probably there, and they probably have a big setup there. And then there are 1,000 financial companies you never heard of before from all over the world that were there. If anybody, Lee, the one thing that became just true. If anybody has a doubt about the spirit of innovation in America, you need to go to something like Money 2020. You see so many early stage and startup companies, and the founders are so excited about what they're doing. It is, it's really kind of inspiring to see that. But
okay.
I'd say there are probably 4 overarching themes among the thousands of, I think there are 18,000 people there or something. There's a lot.
Wow, that's a lot.
Of overarching themes. And a couple that ring true for us. One was stablecoins. Stablecoins were, I heard so much about stablecoins, it was crazy. Everybody. Payment systems that were facilitating digital asset payments. Those were, prolific. The most prolific thing, AI. AI was on every, probably 3 out of 4 signs. There was something about AI. And so those were really, really, really prolific themes. I would say the fourth one was around fraud detection and that kind of thing. Almost always using AI. So those were kind of the 4 themes. There were a couple of standout companies there that I thought some really unique things. There was a company there that was doing tokenized deposits, and to my knowledge, that's only the second company that's doing actual tokenized deposits. There was a place called FASB. I've never heard of them before. And
they're partnering with Custodia, I think, right?
Well, Uphold is who they're powered by. This is another company, Uphold. Have you ever heard of them before?
No.
UPHOLD. I saw their name on several things, powering things. They've had on Sunday, this conference actually starts on Sunday. On Sunday, they had a stage they sponsored, almost the whole day long of panels of different kinds of things. And I'd never heard of this company before. And I'm thinking to myself, where the heck? I think it's private. I know that they have only a handful of investors, but I saw their name on a lot of stuff. So there's a heads up for folks. Keep an eye out for this company, Uphold.
Will do. Okay, and how did your talk go? What did you talk about?
My talk went great. I thought I had a great person that I spoke with. We talked about the funding for fintech companies, alternative fundings and funding for early stage and startup fintechs. Something I know a little bit about.
Sure.
And so it was really well received. I had tons of people who stopped me later. One of the things, so I was there with another professor from the program, John Thimble, and we were carrying our Duke FinTech backpacks.
Nice.
Then I was stopped 50 times by people asking about Duke FinTech, or they were Duke alums, or they had kids
Awesome.
at Duke. And it was really, really awesome too. I see we were the only school that I saw there. There probably were other schools there, but we were the only school that I saw there, which was kind of cool.
All right, spreading the Duke brand.
We were definitely spreading the word around a little bit.
All right, I like it.
It was, and on my way back, I had to fly back from Atlanta, of course, because I was on Delta, and I was sitting next to a woman. She was a school teacher in Peru. Her husband from Lima was there at Money 2020. So, I mean, he loved it, had a great time, that kind of thing. But, I mean, it really was. I mean, I was meeting people from all over the world who were there for the conference, and everybody was excited. Everybody.
Well, a lot of reasons to be excited.
Yeah.
Money 2020, Jimmie, it sounds like, I haven't bet, but it sounds like the type of place where deals get made. Would you say that?
There were a lot of VCs there. There were a lot of private debt guys there. I actually had at events away from the conference with both kind of parties. Yeah.
Okay. So we have a couple of deals to talk about.
Okay, let's do it.
In the stablecoin realm, as you mentioned, one of the takeaways from Money 2020. So, it's overwhelming, the volume of stablecoin announcements that are coming out these days, Jimmie. It's every day there's some big announcement. Now, most of them are light on details, and we'll get into that, but still, there is clearly growing momentum around stablecoins. I will actually be in DC next Thursday to speak on a panel about stablecoins at the Federalist Society's National Lawyers Convention. Okay, so the Conference of State Bank Supervisors President will be on the panel, the Coinbase General Counsel. So I'm looking forward to a robust conversation on that panel. Hit me up if you're going to be in DC or at the conference. But the first announcement I want to talk about, Jimmie, let's just throw two in and get your thoughts on these two. Okay, Zelle. Right, we all know Zelle. Probably most of us use Zelle. Okay, it is operated by Early Warning Services, which is owned by a consortium of banks, including the big banks. And Zelle was created to compete with Venmo primarily, and it's been quite successful. I mean, we do have it's real time, or pretty close to real time.
Yeah.
Pretty close to real time in the U.S. for consumer peer-to-peer payments. But they announced, last week, I believe, that they are going to start allowing their customers to move funds across borders using stable coins, Jimmie. Okay. Yep. So that is announcement number one. Okay. Announcement number two is the oldest fintech in the country, maybe the world, actually, Jimmie. Okay. Western Union, folks. Western Union, yeah. Western Union built the first transcontinental telegraph line in 1861, folks. Okay, 1861. They plan. Okay, and obviously we all know they're a big, remittance provider. Okay, hundreds of millions of. They have 100 million customers. Let that sink in. 100 million customers. What kind of business wouldn't want 100 million customers? Come on.
Exactly.
They plan to launch a dollar-backed stablecoin. Okay, to allow their customers to send money internationally, detached from local currency. Right. So they're calling it the U.S. dollar payment token, and it's going to be built on the Solana blockchain. So this is a big win for Solana, and it's going to be issued by Anchorage Digital Bank, the first national trust bank for crypto in the U.S. So, what are your thoughts on these two announcements? These are big players, Zelle and Western Union.
Yeah, so I mean, it's interesting. I think to do this. My first. I think the first thing is why. Why? I mean, I can't imagine there is. I mean, it seems like everybody's jumping on this bandwagon. When I ask them,
Everyone is. Yeah.
they're like, well, because everybody else is doing it.
It's
I
like
mean,
what was it, the Ted Kennedy, like he when he was running for president against Jimmy Carter, and like an interview they asked him like, why do you want to be president? He couldn't answer it, and it kind of like sunk his campaign. You got to have a why, folks, if you're going to do anything big in life.
Why, and is it because I mean, these are especially Zelle is banks, right? Banks have dollars, and maybe why don't you transfer something from $1 to a stablecoin back to $1? Why not just have $1 and send it? I mean, I really don't get it. I'd love to know what the use case. And hey, I'm super pro crypto, but I mean, if banks to bank, I mean, what are you gonna? I mean, why? Why would you use a stablecoin? Why? I mean, you're getting advantage of stablecoins by doing this. You're using the same thing that I could send dollars on, and so I really would love to see what the use case is, not just because they're stablecoins. I don't want to hear that. I mean, really, I'm a huge fan of crypto, but I don't get it. Why you would convert something from USD to stablecoins?
I agree with you. And again, this was one that it was really light on the details. And with some, at least with Western Union, they had, they actually have a name for the stablecoin. They know the blockchain, they know the issuer. The Zelle one, it's just like, oh, we're going to allow this to happen sometime in 2026. It'll be a stablecoin. It does have the feel, you and I have talked about this many times, Jimmie, which is, companies, financial services companies almost feel compelled to have some type of stablecoin announcement or offering, lest people start to ask questions, right? I mean, I think the Genius Act was certainly a game changer in motivating companies to start thinking about, okay, where are things heading? And are we at risk of being left behind? But no one's quite sure of how things are going to shape out over the long term. So it's almost like, well, we have to do something stablecoins, otherwise, we could be, left out to pasture here.
Right.
And this has that feel, that Zelle announcement. Look, I don't know all of the members of Zelle. I thought it was just domestic banks. So ultimately, you're going to need a partner bank in the other countries, right? So, I don't know why. So I guess you would have a partner bank. It would still be a correspondent banking type of relationship.
It would have to be.
It would have to be, assuming the person on the other end would want to, cash out their stable coin into the local currency. Because, look, we still don't have, local merchants in other countries are not accepting, U.S. dollar denominated stable coins, right? And should they ever start to do that, I think countries would start to crack down quite quickly. I mean, that is a kind of
very quickly, I would think.
So that means that folks at the end of the day will still need to convert a U.S. dollar stablecoin to the local currency, and that's going to require them to access a bank. So I don't know why they couldn't just do this with tokenized deposits. So I'm totally with you, Jimmie. Why? Why are you doing this? How's it going to work? What advantages does it provide you? What does it provide your customers? This just, to me, feels like, well, stablecoins are hot and we have to do something stablecoin related. So let's put this announcement out. Let's go to the Western Union one. Because that seems more substantive to me. What are your thoughts on Western Union?
So the Western Union one seemed a little bit more logical, and mostly because you are going to probably convert this into a different currency, and so having a stablecoin would seem like a good way to do that. You could use one stablecoin, you could convert it into multiple currencies. In particular, if you were sending money home, and maybe home home was a couple of different places, use different currencies, that kind of thing. And so that one seemed to make a little bit more sense to me to have a Western Union type setup. And for people who don't know, and I think probably most people do that are going to be listening to this, but these are used quite a bit for folks that are moving money back home, sending money home, right, for a Western Union. And So I think using a stablecoin, in particular, if it lowered the fees, would be great, because Western Union gets to be pretty damn expensive for people. I've talked to folks that use it, and then the interesting thing they always complain about is how much it costs. At the
it's like 6 or 7%. I mean, the World Bank tracks this, so it's like 6 or 7% of the
and so
transaction amount.
I saw when I was at Money 2020, I probably saw, if I saw when I saw 30 or 40 companies that were doing cross-border payments and stablecoins. And so I obviously it's popular, right? It's something people want to do. People want to, stablecoins are really nice, especially if you're sending money to a country that has, a lot of inflation or something along those lines. It's a way to lock in the value of currency to the USD. And so I see it seems to be much more practical for someplace like Western Union to facilitate something like this, because it does allow people to hold currency, value in a stable currency, and so I think is that seems to make a lot of sense to do something like that. It would be interesting to see. Is Western Union going to change its fee structure? I can't see why they would, right? Just because they send dollars. There's not really anything more stable than that. So. It'll be interesting. Hey, and you know what? If they're charging 5 or 6%, they can get it. Good for them. It's a business; they can do whatever they want. I'm not saying they shouldn't charge.
Yeah.
Charge whatever you want. I think when you start charging a lot, you're going to get competition. And
of course,
if 2020 was any indicator, there's a lot of people that want to do this. A lot of people that want to do this.
Yeah, I mean, look, people have been trying to eat into those Western Union MoneyGram profit margins for quite a while to little success. Yeah, so I mean, look, history suggests that it's stablecoins ain't going to do it but maybe we're wrong. Maybe I'm wrong. A lot of people obviously think that stablecoins can be the better cross-border payment solution. I think a lot of those costs, though, Jimmie, are from regulatory requirements, right? I mean, every sort of correspondent bank, Western Union to all the correspondent banks along the way, have to do KYC, AML, and those requirements aren't going away. So, so I do start to wonder, to what extent that any cost savings attributed to stablecoin usage is because of, frankly, regulatory arbitrage. So, so we'll see how that. We'll see how that plays out.
The infrastructure is also pretty aged at
for sure.
And so I think there are some economies that can be gained from newer technology and things along those lines. I don't think it would just be regulatory arbitrage, although there may be a little bit of that. I think it would probably, you wouldn't probably have to jump through as many bank hoops if you remove in stablecoins. You can still do the same AML. BSA type of reviews, and maybe streamline it quite a bit more because you're not going through banks and that kind of thing. So it's certainly something that is that people are building for. My question is, how much of this is really demanded? I mean, how much cross-border? Now, there's a lot of cross-border payment. Don't get me wrong, especially among corporations and things like that. But among individuals, I mean, when was the last time you sent money abroad?
I can't even think, man. I don't even know. Long time ago, brother. Long time ago.
It's a long time ago.
It's not a pain point that most Americans, at least, or people in developed countries. And I know that's an elitist. There's other people around the world. I get that, but look, I just got, this is a kind of a talking point of mine, but I think it hammers home the point well. I just got a notice from JP Morgan Chase that the annual fee on my Chase Sapphire Reserve card is now going up to $795. Okay. So people are willing, which I called the other day and they confirmed that will, January 1st is when that fee is due. So Chase, if you're listening, I hope
you're getting a lot of good stuff for that.
Before January 1, because that's just too rich for me. But people are willing to pay almost $800, Jimmie, just to use a freaking credit card, okay, in the U.S. Now, I get that those, generous sort of rewards, and there's rewards, and I'm supposed to be able to, get more value than, but, right, I mean, a lot of people don't, I'm assuming.
Yeah.
And so people are willing to pay that much to use a credit card. Why would they want to use a stable coin that doesn't offer them any interest, does not offer them float, right, which is what credit cards do, does not offer them rewards, and does not offer them the fraud protection, and does not offer them FDIC insurance.
Yeah.
So look, if it were up to the merchants, they wouldn't accept credit cards, right? Merchants accept the payment instruments that their customers want, and customers want to use cards in the U.S. at least, and a lot of other developed countries. Now, I get cross-border is a different ball game altogether, but it does seem like a lot of this momentum behind stablecoins is more push than pull, right? And it's from the providers than like there's just not this mass uprising of people that are clamoring for better payments.
I'm gonna look into this for maybe next week's show. See if I can get some people to do. I wonder what percentage of people in the world, and the amount of capital they control, what that are actually doing cross-border payments. I'm thinking it is a really, really, really small number in the big scheme of things. I mean, I may be wrong. You figure in Europe, you use one currency, right? In the UK is the kind of the standout there. USD, we price almost everything in the world in USD.
Yeah.
So I think with euros, yen, renminbi, and USD, that's pretty much the world, right? And so it's sorry, friends in Latin America.
And if you're doing, and like you said, if you're doing those cross-border payments, it's generally, let's say you're a multinational, it's probably going to be to like 10 countries max. Like it's going to be like the biggest countries that are the recipients of these. And so like, then you're just talking about like, let's say like Citibank is your bank, right? Because that's a segue to our next story. They're going to have correspondent banking relationships with large banks in like 30 different countries. So they're just talking about one hop,
right.
and like the fees for, cross-border transfer with just one hop involved aren't staggering,
Right.
So I'm with you. I would love to see some research. Maybe Derek can get on that to look at this, because it's like, I talk about cross-border, and I know there's pain points. I don't want to minimize the pain points. Look, if you are a laborer here in the U.S. Trying to make money to send it back to your family in Mexico, El Salvador, wherever it may be, 6 or 7% is a lot of money. So I'm sympathetic to that notion, but that's just I think a limited amount of use cases there.
Yeah, I think so. I think so. I mean,
let's move on to other announcements in the stablecoin realm. Okay, TradFi and crypto partnership here. I mean, this is personification of what's going on right now. Citi and Coinbase, Jimmie. Citi and Coinbase announced their intention. Okay, to you got to love the wording of these press releases, right? We announced the intention. So it is going to happen, or it's not going to happen. You intend for it to happen. Okay. Yeah. So I always tell my wife, I intend to do the laundry this weekend. Whether or not I do it is a different story.
Yeah. Your wife would appreciate that if you did that. I'm just saying.
She would,
because I know she doesn't.
But she does. But I'm just hoping she appreciates the intention, right?
Yeah.
So they're going to collaborate on digital asset payment capabilities for Citi's institutional clients. Okay. The release says the initial phase of their collaboration focuses on fiat pay-ins payouts, which I'm not entirely clear what that means, except I think it's going from sort of the fiat economy, on and off ramps for crypto exchanges.
I think so.
And then they say additional details on specific initiatives, including the exploration of creating alternative fiat to on-chain stablecoin payout methods. Now that's intriguing. They're going to share that in the coming months. So what does that mean? Alternative fiat to on-chain stablecoin. So it kind of sounds like a tokenized deposit type of situation.
It does sound like a tokenized deposit. It does sound like a tokenized deposit.
Look, Jimmie, Citi, you know this. Yeah, I mean, I think this is the trend. Like, I think the competition is between tokenized deposits and stablecoins. Yeah. That's kind of where my mind is heading over the next 3 to 5 years. Is who's going to win that race? My money's on tokenized deposits, but we will see. Look, Citi, people don't realize this, or some people don't. They have a massive transaction services unit, right?
Yeah.
They provide payments to most of the world's largest companies because they have the biggest global footprint.
They have a presence.
Yes. So is this something that is a big deal? Too early to tell? Just in keeping with the times, what are your thoughts?
Honestly, I read the article and I was looking at it and said, I think stablecoin. I think Citi is, you know, I remember when they were kind of like the UK. They used to have cool stuff and they used to be global. It's like the UK,
Yeah.
cars. Man, you used to see cool cars coming out of the UK. You don't see a lot of cool cars come out of the
Jaguar.
UK because nobody builds cars. Well, they're not owned by UK companies anymore. They still build a few cars,
True.
but not many.
Yeah.
City's kind of the same thing. Used to see some cool
Ooh.
stuff coming out of City, but not anymore really. I mean, I haven't seen anything cool come out of City in a long time.
That's why they have to partner with cool companies like Coinbase.
I guess,
You know,
and so
you got to import the cool.
I mean, maybe there's a real tide change there, and we see them come out with something unique. But if it's just another stable coin, or if it's a tokenized deposit, it's kind of an also ran at this point. One point I will make here
Make it.
is if you look at kind of the history of innovation in financial services, fintech, over the past say 30, 40, 50 years, almost all really leading things, really cutting edge things, don't come out of the big guys. They come out of small places. They come out of community banks and credit unions. If you look at the first places to put, cards online, to give customers online access, to give you, things like that, those all came out of small places. Those weren't coming out of Citi or JP Morgan or any of those kinds of places, JP Morgan Chase. They were coming out of these really small places. And so, the fact that they're a little bit of an also ran because we already have, obviously stablecoins, we already have tokenized deposits. It's kind of like, okay, you teaming up with Coinbase, which is kind of cool, and you'd be a bank and you'd have on ramp and off ramp. That's kind of cool, but I could do that a couple of years ago. So you better do something exciting here. And if it's just another tokenized deposit or some kind of a stable coin, I don't know. That doesn't really do anything for me. I don't know about you. Are you going to run out and get a Citi account because?
No, I'm good, man. And most of my undergraduate students, they're econ majors. They want to go work in investment banking. I'll just say none of them are clamoring to go work at Citibank. Okay.
Yeah.
So sorry, Citi. But the brand is not what it used to be, as Jimmie said. All right, another announcement, Jimmie. Hard to make heads or tails of this one is MasterCard.
Yeah.
Right? MasterCard, another legacy TradFi firm. They are in talks, late stage talks, as Leo Schwartz at Fortune is reporting, to acquire the crypto and stablecoin infrastructure startup Zero Hash for, get this, between 1.5 and 2 billion with a B dollars. What do you think? So Zero Hash is not a stablecoin issuer. They're kind of an infrastructure provider. We're actually going to have someone from Zero Hash speak at Digital Assets at Duke. Really looking forward to that. Chicago-based company Zero Hash. Look, I remember remember Facebook Libra, their kind of stable coin that everyone flipped out about.
At the very beginning, I was a fan of Libra. I think it was
you were about, you and like 5 other people were the only ones. But Libra, Facebook was very intentional about that, and it was a consortium, right? So it was originally designed to be like a consortium. And I remember Visa, I don't know if MasterCard, but I know for a fact Visa was a original member of the Libra consortium. And it was at first a head scratcher because it was like, well, this was like a direct threat to like Visa's business model, right? But if you think about it, it's the innovator's dilemma, right? Yeah. If this is the future of payments, you got to have a seat. You got to get on that train, okay? Yep. And so, this is kind of how I interpret this announcement. Again, the deal hasn't been closed, so we don't know what MasterCard's intentions are here. But, we're seeing both Visa and MasterCard make some deals in the stablecoin space.
Yep. I think that, I'll tell you, MasterCard, I didn't see Visa at Money 2020, but I definitely saw MasterCard there. I mean, they had a huge presence, and not a small, a huge presence there. They were everywhere. They had banners every place. I mean, I don't know how much they spent, but it had to be a lot.
Yeah, well, spend a little of that at Digital Assets at Duke. MasterCard, come on.
Yeah, they should be. They should be out here at Digital Assets,
folks.
It was. I think that's the thing that I asked almost all these payment companies that I saw there was, like, how do you compete with MasterCard and Visa? I mean, their networks. They already have the terminals there. They already have
economies of scale.
How do you compete with them? And hey, you know what? I'm a huge supporter of startups and early stage companies. I mean, really huge. But it's going to be, it's going to be tough to do that. And so you see these partnerships like this, you see them acquiring companies like this. You see kind of where they're going or where they're willing to experiment, where they're willing to put some dollars. And to me, it says, man, it's going to be a tough road to hoe because these guys are oligopolies really, and it's going to be tough to get in there. I think it's the combination. They have the payment rails, they have the credit cards, they have these things already in place, and so for startups, it's going to be tough. I think to get going and to get that critical mass that you need for real adoption.
Yeah. Well, let's talk about two last stories for
Okay.
today, Jimmie, on the policy front, because look, a lot of people obviously believe stablecoin is stablecoins and blockchain are superior technology for payments, but you need some enabling policy changes to really fulfill their potential, and
Yeah.
that's the last two stories today. So the first is accounting. Who doesn't love a good accounting story here, right?
I love a story.
Right. So if stable coins, right, as people envision, are designed to be a stable payment mechanism, right, then they're going to need to be recognized as such by applicable accounting standards. And so this past week, the FASB, the Financial Accounting Standards Board, which sets GAAP, right, generally accepted accounting principles in the U.S., met, to consider whether dollar-backed stable coins should be treated as cash and cash equivalents on companies' financial statements, right? Similar to, obviously, deposits, but treasury securities, short-term treasury securities, right? And that would really, I think, obviously make it a lot easier for companies to use stablecoins, hold stablecoins on their balance sheet. I think it makes sense to me. I don't have strong opinions on this, Jimmie, so curious your thoughts. The one thing I will note, though, is that there's not a single stablecoin that hasn't broken the buck. So there is a history here. Now, obviously, with Genius, looking forward, the way that was structured was, it's going to make it, unlikely or harder to break the buck.
Very, very, very unlikely. Yeah.
But it's still possible, and history suggests that it will happen for one of these stablecoins. So I don't know if the time is right to have this accounting recognition, but certainly I think after a period of time, if stablecoins do truly hold their value, it certainly makes sense. But I wouldn't throw a hissy fit if FASB said, you know what, these things are cash equivalents right now.
Yeah. I mean, I think it makes sense to do this. I think it will. I mean, let's face it. If you can't, use this on your balance sheet just like cash and other short-term assets, it does make a difference. I would go one further. Probably once that happens, we're going to see two other things occur. One, we're going to have the ability to margin these, and we're going to have the ability to do cross collateralization.
Good point.
And for financial companies, so for most people, they don't really care about that kind of thing. But for financial companies, which you will actually feel the ramifications of, being able to have marginable securities and to cross collateralize things makes a huge difference. It would free up more capital for other things, and so I think this is the first step in that path. And honestly, I mean, I think as you said, is there a possibility of them breaking the back? Yeah, but it's going to be very, very, very like money market fund breaking the back. And then it's usually by a penny or something. So I don't worry too much about that. There's usually enough release or enough deposit to modify any of those kinds of issues. But I do think that this recognition will have much bigger impact. And I'm a huge fan of this. I mean, I think it's funny. I've been talking to some large financial institutions, and this is one of the things that comes up pretty often. Marginable has to. People don't want to hold assets that aren't marginable because it costs so much in capital to do that. And so this would facilitate, I think, probably some more adoption, certainly more usage by regulated entities of different types.
Yep, great points there. Okay, well, the last story of the day, Jimmie, is around Federal Reserve master accounts. Okay, and look, everyone's lining up to be a stablecoin issuer now because Genie has provided a clear regulatory pathway to do so. But the benefits are going to be limited unless these issuers can get access to Federal Reserve master accounts, which entitles them to the Fed's payment systems and the ability to settle in central bank money, right? Which I kind of find it's ironic, for all this technology and premised on sort of bypassing traditional payment rails, that really the magic key, the unlock, is to get access to Federal Reserve payment systems. But irony was lost on the crypto industry a long time ago. And so, it's unclear. So if the Genius text, does not change eligibility requirements for master accounts. So it still is largely at the discretion of individual Federal Reserve district banks. Okay. And obviously there's an ongoing fight between custodial litigation and the Kansas City Fed around their ability to access a master account. And so Governor Waller is in the front running, one of 5 finalists, as Treasury Secretary Bessent recently announced, to be the next Fed chair. If you want to be the Fed chair in the Trump administration, you of course have to embrace crypto. So they're all kind of lining up to praise Bitcoin and crypto and whatnot. I'm not a fan of that, but that's the world we live in now. So anyway, he gave this speech. He hosted a conference a few weeks ago, Jimmie, at the Fed around payments innovation. Okay.
Yeah.
And the big news coming out of that was he gave this speech where he proposed something called a skinny master account. Okay, so this is a master account on GLP-1s, as I like to say here, and the logic is, look, it would provide stablecoin issuers and other innovative payment firms access to the Federal Reserve payment rails, right? But on a limited scale, without all the bells and whistles that come with a full kind of master account. Okay. Right. So they wouldn't be able to get interest on their balances held by the Fed. Balance caps may be imposed. Okay. Right. They would not have daylight overdraft privileges, right? The Fed would not extend them intraday credit. Okay. And they wouldn't get some other things, but then they would still, again, the important thing is be able to use to settle in central bank money. Right. And that would allow them to bypass correspondent banks, right? So kind of cut out additional middlemen. Now, this is just an idea. It's just an idea. They're going to look at it. Fed staff now, this is how it works, right? A Fed governor gives a speech, and then it sort of falls on the Fed staff to say, okay, what the hell do we do with this now? But I don't know. Like, I'm open to the idea. Like, I'm glad to kind of see this type of thinking and trying to. It was really kind of a split the baby approach here. I mean, I thought it was actually a pretty reasonable stance for Governor Waller to take. It's like, look, because when the Fed provides payment services to eligible depository institutions, it is exposing itself to risk, right? So there are risks to the Fed, and so he's recognizing that and trying to say, okay, well, how do we control and limit those risks for sort of novel types of institutions while still enabling them to provide their service in a cost-effective way? So I'm not opposed, but I would like to see more details. What are your thoughts?
So I'm not opposed either. I'd like to see more details. I think that it seems like a logical approach, much like the accounting that we just talked about. I think it's something that, as time has come, we should address it. Interestingly, at Money 2020, the Fed and SWIFT were there, and they had big setups there. In fact, I saw Tom, one of the speakers at Digital Assets at Duke from SWIFT was there, and I think that if you take these to the logical conclusion, you have to have this, right? I mean, to be players, I mean, on a kind of the world stage, I think you have to have this kind of access. Otherwise, you're going to be relegated to a little bit of second tier notion, and so it just seems like the logical next step. And in particular, I think if this goes hand in hand with the accounting recognition, it would seem like we almost have to do this. It would stand out if they didn't.
Yeah. I think look, if the Trump administration, as they say, wants America to be the crypto capital of the world, the reality is that you're going to need access to central bank money and settlement. So makes sense there. All right, Jimmie. Well, there's other stories we didn't get time to
There
discuss,
are
but
other stories, but I mean,
that just means we already have a full agenda for next week, man. Oh, actually, next
right.
week we'll maybe we'll have to move it to next Monday because I'll be in DC for the.
That's right. You'll be in DC
to talk about stablecoins, but we'll do a little recap actually for my DC appearance.
Our listeners for a recommendation. So, I actually work with a software company also 1 day a week, and so I have to drive quite a ways to do that. And so I'm listening to books, and more than just reading books. And so I'm looking. So I have some credits in my Audible account, and so I'm looking for books that would be interesting. So I read all kinds of books, but I tend to read more biographies and finance oriented things. I just finished listening to the Lords of Finance.
Oh wow!
Which was great. If anyone has any thoughts, I've listened to a lot of books and read quite a bit. But I'm always interested in kind of expanding my horizons. And so if anybody has any thoughts, I've read a couple of Milton Friedman's lesser known books, some that he did with his wife, Rose, and those were very, very good, I thought. They tend to be very concentrated on single subjects, as it should be probably. But any other thoughts, please send them my way. You can DM me on, message me on LinkedIn or DM me on Twitter, either one. But I'm really very interested in finding a few more interesting books, things that I wouldn't pick for myself, maybe.
Well, I have one recommendation. So during the pandemic, I tried to get into audiobooks, and it was hard, man. I got into a few, but because it takes so much longer, first of all, than reading the book. And you get distracted, and it's like, you miss, like, if you kind of zone out for a minute or so, it's like, and then you're zoned back in and like, what did I miss? So I've just struggled now. With driving, it's a little easier. So, but that said, I always think like this is an area for innovation, right? Because what generally happens is people just, write a book, okay, and then they hire someone to read it. So it's like sort of an afterthought to do the audiobook. And my thinking is like, no, like people should be like focusing first on the audiobook, like producing content specifically for an audiobook. So Malcolm Gladwell did this with the Bomber Mafia, I think is the name of it.
Yeah.
So I recommend that one because he made that specifically for audio. So the Bomber Mafia is a good one. Another really good one, Jimmie, that I thought was well done for audio is I just texted it to you. It's called Lafayette in the Somewhat United States. Okay.
Oh, that sounds good.
It's right up your alley. I thought the audiobook was fantastic. The woman's a little snarky. I appreciated that. So it's all about the Marquis de Lafayette's adventures in the United States and the Revolutionary War.
The Marquis de Lafayette was in the United States. People don't realize what a profound figure he was in the founding of the United States. I mean, I'm looking forward to reading it. I've read about him, but not books. But I mean,
it's a great audiobook. You're gonna like it.
It is. I'm looking forward to listening to it. Any other suggestions? Send them my way.
Send them to Jimmy's way. I'll send them my way too. All right, we'd both like to see him.
There you go.
All right, Jimmie. Have a great weekend. Happy Halloween, and I will see you soon.
You're feeding with the kids tonight.